Why is this tool valuable? It allows me to wrap my mind around the speculative projection where Bitcoin might be heading. In today's video, we're going to look at a special resource and tool that will benefit any investor and trader in the cryptocurrency world. If you're serious in investing and trading in these markets, look into Bitcoin is something that you should be looking at, if not every week, every single day. If you don't have the time to put in the energy to invest your time into these markets before you put your money into it, you are gambling, you are betting, you are Hail Marying, and you are going to, at some point, probably be in the category of people who feel the pain of the markets because you don't understand the nature, the volatility, the cycles of these markets. Okay, and I get it. When I first started to invest in this and get into the blockchain understanding, I didn't have the time either. I was working 7 days a week, full-time job, full-time business, never really had the time. And I was fortunate enough to have a few mentors that took me through the process, that showed me the ropes in the beginning, and then I took it upon myself to do deep dive study, fundamental and technical analysis over the past 6 years, full time now, to present this information to you with confidence. Now, if you're looking for a resource, you can check my website, cryptofluency.com, down below, the link in the description. I have a blockchain blueprint course. It's completely free. I poured my blood, sweat, and tears into that. This course is meant for you to start right now. You don't have to pay for it. You put your email in, you get on the email list, you get this over 3-hour course in return, and we're going to look through blockchain from a fundamental level. Okay, and if you want my real-time information, my entries, my exits, my positions, my participations in real time, because these tend to be very time sensitive in some cases, I do have a fast track membership for you. You can check it out all on the website. So today I look into Bitcoin, and I monitor it for several reasons we will get into. Let's take a look at this website here. When you first come to lookintobitcoin.com, it's making Bitcoin data accessible for everyone. And yes, this resource here is specifically tracking Bitcoin. So why do I, as a Cardano holder and a Cardano Layer 2 native token supporter, choose to look at this resource? Because Bitcoin is pioneering the way. Bitcoin is the OG, the trailblazer, and it tends to lead markets. And what you have with altcoins, which is every single other altcoin, is you're going to have the altcoins following the tendency and trajectory of Bitcoin market volatility, just because it surpasses every other altcoin by market cap by over double. Okay, and in most cases, way over double. If you look at my other tool resource video, CoinGecko, where you can see Bitcoin in the top 10, look at the market cap and the difference between Bitcoin's market cap and Ethereum's market cap, and then the 3rd, 4th, 5th, and 6th, and Cardano's market cap is dramatically less. So when you have a tremendous amount of that market cap in Bitcoin and volatile moves occur, most of the volume is in Bitcoin. What tends to happen is that then people also get positions in the altcoins, so the altcoins tend to trail or follow the trajectory of Bitcoin. So I use this as a resource because where Bitcoin goes, altcoins will likely follow. It's not set in stone by any means, but the likelihood of an altcoin following the trajectory with a little bit of a lag in some cases is higher than unlikely. Eventually, one of these other altcoins, in my view, Cardano, will eventually have, this is just my personal speculation, have a higher market cap than Bitcoin. I think Cardano could be number one. I think Cardano can get above Bitcoin, and then that day, and in those cases, or another altcoin can surpass Bitcoin and become number one, and Bitcoin could drop to like number 2 or 3 or 4, right? Over time, when these other blockchains, these layer ones, gain a tremendous amount of use case with the utility of smart contracts and what have you, I feel like at that time, you won't have the ability to utilize Bitcoin as a market leader. So then the game is going to change. But for right now, and perhaps for the next 5-10 years, this could be a very valuable investor tool for you in the coming bull bear market. There's so much to look at with this website, and what I'm going to focus on for you right now is the charts. And when you get into this, you can go ahead and look into it yourself and go through every single nook and cranny of the website, like they're announced by Yahoo Finance, NBC, Cointelegraph, and I love the charts. So here are the charts. When you hover over charts, you're going to get a tremendous amount of these charts. And you might find that you like a chart more than another chart. I'm going to show you the charts that I've been using for years. And actually, when I first started look into Bitcoin, there was just a lot less charts. So this resource has constantly been evolving, and these charts are getting amazing. And they're being built by all types of people, and it's just a wonderful resource. Let's click on charts here. You have on-chain market indicators, the market cycle, on-chain movement, mining, okay? The first chart that I became aware of in this resource was the stock to flow model. So what is stock to flow? Let's look at gold, right? The reason that gold is one of the most popular investments throughout the entirety of humanity is because it is hard to find new gold. Nobody could go ahead and print and make gold out of scratch, right? You have to dig it out of the ground. And our ancestors have been doing that since the beginning of time. And so there was a lot of gold on the ground, seeable by our ancestors, that was dug up and used. And then it became harder and harder through the generations to find the gold. And now you still have gold mining going on, but the operations are absolutely enormous, with 15 different rock trucks and 7 different excavators and these big, enormous, huge sluice machines. Gold Rush is a popular show. I think it's on the History Channel, where they go through profiling these miners that are mining a couple thousand of these ounces per year, netting them a couple $1 million. So a couple thousand ounces picked up out of the ground can give this company a couple $1 million. And so it's not that much. Our ancestors used to dig up gold and find maybe 1,000 ounces in a couple nugget clusters in the bottom of some river or somewhere, right? And the stock represents how much gold is available for people to buy, how much has been found, how much is out here in supply. The flow is going to be how much new gold gets added to the pot in a consistent basis. That's how much flow is added to the stock every year. There is a certain amount of stock to flow ratio that's changing every year because the amount of flow dug up from the earth by all the different miners and all the different continents are adding to that stock. The reason that gold is so powerful is because although all that's getting added to the stock, it doesn't really affect the overall holdings of gold that is in the stock, right? So the flow doesn't really outbalance the stock. That's why people trust it. It's what they call a hard asset, a sound asset. If you look up sound asset on Google, type in sound asset financial term or hard asset financial term, you're going to get a definition that's going to talk about this. investors in every single country, governments of every single country, can confidently put their money in gold and feel secure about it because gold is continuously rising in value. If you look back at gold prices since the beginning of pricing gold, it is slowly gone up over time because there is only a finite amount of it. Now, there is a little bit added every year, but basically not that much to change how much demand is out there for gold. So people continuously want gold. Jewelry stores are buying gold out of the flow every single year to create jewelry. Investor companies are buying it. Certain miners are keeping portions of it. Why am I talking about stock to flow here? And why is this the first chart I'm going to show you? What do they say about Bitcoin? They say Bitcoin is like digital gold. Why do they say that? Because gold really has no other purpose. Yes, there's jewelry and stuff like that. Okay, we get it. But outside of that, it's not like I can go ahead and take a gold bar, walk down the street, buy a house, and hand them my gold, and they're going to accept it as tender, as dollar, as cash. Back in the Roman era of time, or way back then, that was like the only way that you could purchase large amounts of land and items. But now we have a different system. So outside of the permanent investment of it, this sound investment that you have with gold, it doesn't really have much utility. You can't really go ahead and buy stuff with it. And so Bitcoin, being the presenter of blockchain, it relies on extreme security in its model. So it is a layer one built with this strong, robust security blockchain mechanism. Outside of that, there is not a realistic approach to using Bitcoin as dollar bills. Yes, we're in the Roman eras. Yes, you can go ahead and give Bitcoin to people and it'll last a lot. And some companies are accepting Bitcoin. Elon Musk used to be able to buy Tesla with a Bitcoin. There's a Watchbox is another company. I think they accept Bitcoin. So you can buy luxury watches. You can use Bitcoin to some degree, but it's really not that efficient because the transaction mechanism in Bitcoin is extremely slow. So the amount of transactions per second is extremely slow. So it's not that Bitcoin has a massive future in being a currency that is transacted by every single person on planet Earth. And I think that's another reason why people are confused about what Bitcoin is. It's essentially a store of value. So people are going to want to hold it. People are going to want to gain a Bitcoin. There's only 21 million of Bitcoins that will ever be minted. And we're going to get to the stock to flow. See, the thing is, how many millionaires exist on planet Earth? I would say a lot more than 21 million of them. I think there's a lot more than 21 million millionaires. How many of these millionaires have a Bitcoin? So when you look at Bitcoin, there is 18 million of them that are sent out into the world. And what's extremely unique about cryptocurrencies and Bitcoin is that there's a max circulating supply. There is a 21 million maximum amount of Bitcoin that will ever be allowed to be in the world. And 18 million of them have already been released through a mining process. There are mining machines distributed around the world, run by miners, people who are facilitating these mining services to validate transactions on the Bitcoin network. That's a whole deep dive in another topic. And through that mining process, the ones who are solving the puzzles and validating transactions are getting fractions of a Bitcoin in return. And that process is releasing certain amount of Bitcoins every single day. And that will continue on till I think I read somewhere 2140. That around that area will be when Bitcoin stops and all 21 million will be out into the world. So think about that. Every couple years that go by, 4 years exactly, and we're going to look at the stock to flow, every single 4 years, those rewards get cut in half. And every 4 years in half, and every 4 years in half. So the releasing, the emissions get cut in half every 4 years. This is how it will drag out to 2140. Most of the Bitcoins were released way back in 2008 when it first started to happen. See, what's different about Bitcoin though and gold is that once the 21 million are minted, there is never any more coming back into the world. So that is even more sound in the financial term and hard as of an asset than gold, because gold is continuously getting more every single year, every day. Bits are added into the pot. So Bitcoin's different because there's a finite supply. Imagine what the price of gold would do if every bit and grain of gold was mined and there was zero left. Like you could scan the earth with some technological meter and there was zero gold left on earth. And all the gold left on earth was what it was. But people keep wanting it. People keep wanting to buy it. That would drive the price of gold up like you can't believe. So this is the first model, stock to flow, because it looks at Bitcoin's stock to flow model and projects a chart. So all these charts are going to project a certain theme and give you something unique to consider. All right, so let's look at stock to flow. Stock to flow. Look at this. And what I do is I double tap it, bring us a little closer. So what are we looking at here? This probably looks like a big rainbow storm for you. And we're going to take a second to look at the beautiful nature of this stock to flow chart in our look into Bitcoin resource. So over here, you have this days until halving. So 0, this is when the halving happened. And then it slowly comes all the way out into how many days until the next halving. When this color and this color meet, that is when the halving occurred. And you can look back through history and see that this was when that happened. And you can look back and see that this was when that happened down here around that time. And then the last halving event, the last one that we experienced, was in May of 2020. Previously was around this time, kind of like zoom way in there, of 2016. 4 years previous. And you see the dotted lines? These are the projections. 2016. It's not 4 years exactly, but it's a 4-year process. 2012, right? So 2012, 2016, 2020, we got one coming up, 2024. And when did Bitcoin begin? 2008, 4 years before this halving event. It would have been a fantastic, and congratulations to you if you're watching this video and you were investing in Bitcoin over here in 2012. I actually found out about Bitcoin and watched mining videos and tried to wrap my mind around it back here in 2012, and it was above my head and I could not understand it. So I did not take advantage of that at all. So Bitcoin, yes, was down here at about 10 cents and even lower. It was about 5 cents at one point Bitcoin was. It's hard to believe that Bitcoin right now is hovering around the $30,000 mark. So why is this tool valuable? For me, what it does is it allows me to wrap my mind around the speculative projection of where Bitcoin might be heading. And so you have this line here that correlates to the halving events, where this line comes in and has this curve. That's generally where the projection for the halving event's going. What happens is the price tends to rise up into a bull market structure, to a blow off top, and then it slowly begins its bear market retracement, goes through that process all the way through to about another halving event, and then takes off into the next uprise. You have this sort of ebb and flow of bull markets followed by a retracement, bear market. Then there's a halving event that kind of gets thrown in there, followed by an uprise in price. And then the cycle continues. There's 4-year cycles here. And in fact, when you're looking at stocks and traditional markets, And long-term investors, Wall Street investors, they tend to like a 16-year amount of time for anyone to consider an asset worthy of having history. And so this halving event that's coming up in 2024 marks this 16-year amount of time and data in this new emerging asset. This halving event, I feel, is one of the more special halving events that we're approaching. And when you look at how these halving events act, there is this uprise in price, and then it normally goes below the line, right? Below this line, and then the halving event happens, and then the price goes above that line. This is called a bubble. This is a bubble pop scenario, and then the prices retrace. Have the halving event, then you can see that the price hovers behind that line and then breaches above it, and then follows and comes back down to this line, this stock to flow 365-day average line. You see how it's in like the blue, the dark blue? We're getting closer to the 0 day. We've had a long time of moving, so this is 1,400 days away from the next halving event, 1,200 days, 1,000, 800, 600. We're literally, what's the date here? This is April 27th, 2024. We are not that far away from this halving event. And then what you can speculate is that perhaps when this halving event occurs, that then price might go up and crest a little higher, perhaps, than this line, or maybe a little lower, because there's a concept called diminishing returns. So returns through cycles get less and less. From over here, when Bitcoin's price was down here at, like a nickel, and then it goes up to $30, that is an enormous growth. That is enormous. If you would invest $1,000 here, right? Let's just do this math. If you would invest $1,000, okay? Get out your calculator if you want to do it with me. $1,000, we're going to divide that by 5 cents a Bitcoin. We would have gotten 20,000 Bitcoins, right? Now let's say we caught the top, or let's say we caught 27, not the very top. Let's say we caught 25, right? So let's times the 20,000 times 25. $500,000. That $1,000 went to 500,000. If you just put that on a computer because you're in college and you heard about Bitcoin and you got 20,000 of them because you put $1,000 in and you held that, what's 20,000 times the price today? Let's just say times 25,000, right? This is going to blow your mind. 500 million bucks. That's nuts to think about. And then if you want to have some fun, which is what I like doing, I like to say, okay, what if I would have purchased right here around this halving event? And I always go up. I don't miss. I don't want to say I timed it perfectly. Let's say I would have bought Bitcoin at $21. Not over here at 11, right? I missed out. It's $22. So imagine if I would have put $1,000 and let's divide that by $22. That would have given me 45 Bitcoin. Right here in February 10th of 2013. And then let's go ahead and see what it would have been like if we would have sold at 774. We would have had 45 Bitcoins. Let's say we did 45 Bitcoins. Let's times that by $700. That's when we sold. That would have given us 31,000. See the difference of that return? Right here, if you would have put 1,000 and you times somewhere near the top, you would have gotten 500,000. You did the same thing around here, okay? You're getting still a substantial amount. Where else can you take $1,000 and grow it $30,000, right? And so you can do the same thing right over here. Let's see if we would have gotten Bitcoin at $800. Let's divide that. Let's do $1,000, right? Divide that by 800. That would have given us 1.25 Bitcoin back in January of 2017. And we sold at, let's say we didn't quite catch the top, but we sold around $14,000. So 1.25 Bitcoin times $14,000. That would have given us 17,500. So again, the returns are less, is what I'm trying to say. Go ahead and calculate the price right from the halving point and right from the top. I like to go above the all-time lows and then lower than the all-time highs. Your $1,000 would have grown 17,500. You have netted like $16,000. And let's do it one more time since we're in the mode of doing it together here with our calculators. Let's say again, we pop in, we miss all these events and we get into Bitcoin at 9,000. Let's say we take $1,000, right? And then we divide that by 9,000. You're gonna have 0.11 of a Bitcoin. There's a lot of people out there that say, if you have 0.2 or 3 of a Bitcoin, you might be one of the most successful, wealthiest people of the future. If you have 1 Bitcoin, you might be even way more successful. Like maybe Bitcoin goes to $1 million at some point, right? That would mean that if you had 1 Bitcoin, you have $1 million. That's not the way that it is now, and who knows? And returns are diminishing, but again, we're factoring in stock to flow. So there's a lower and lower amount of Bitcoins released, but more and more of a demand, right? There's more than 21 million millionaires. And my theory is that they're all going to want 1 Bitcoin. They're all going to want one. And I know personally, because I've read articles, okay, I've studied this stuff in detail, that certain investors, this is bizarre for me and you to think of, will not invest in Bitcoin until Bitcoin hits $100,000. Like they're not interested in buying Bitcoin. They have all this money, right? They're whales, they're rich. They don't even want to invest until Bitcoin hits $100,000. And you know what they're gonna do? They're gonna spend $1 million at that point, or 10 million, and get like 10 or 100 Bitcoin at that, right? Because they have 10 million to put in the game. Now you wanna hear something even stranger? There are some people out there that only are going to be interested in investing in Bitcoin when it hits $1 million. They don't want anything to do with it until it hits $1 million because they have disciplined trajectory marks. They're investing in all kinds of other stuff. They're making their money in everything else. They don't care about Bitcoin. But when it hits $1 million, they're going to put $100 million in and buy 100 Bitcoin. Think about that. There are people out there that'll do that. And that's how you have to think, how can the price get so high? Because you have these financial institutions and these massive high net worth individual traders and investors that are willing to come in when prices are that high. That's exciting for them. That's when they're attracted to the market. So there's still time, there's still space. Let's do this last calculation. So around $9,000 at around $9,000 of Bitcoin, we invested $1,000, we got 0.11 of a Bitcoin. And let's say it goes up to 60,000. Let's say, man, we caught it pretty much at the top and we sold at 50,000. So we're going to times that 0.11. We're going to times that by $50,000. And that's going to give us 5,500. If you notice that the first event from the beginning is like rogue, okay? It's absolutely nuts. It's just the growth is so enormous. It's like it'll never happen again with an asset, with like Bitcoin. You then get this dramatic reduction in price growth. So then it gives you like 30 something thousand. And then the next time it was 17,000 and so on and so forth. It almost gets cut in half the returns every year. So you have to invest more money to get more profits in the market. So this is a fantastic resource to wrap your mind around time. So around this time, this halving event's going to happen. And another thing to look at is the tops can happen around this curve, but not specifically before or after or right on the money. This in 2017 happened afterwards, after the curve. Over here in 2020 and 2021, it happened left of the curve. So there's a lot of people that think it's going to happen even more left of the curve here. Some camps out there think it's going to happen later. There's lots of factors that come into play. We could project that perhaps the price will eclipse the previous all-time high and present a new all-time high. This could also be some outlier crazy asset where this return can go way up higher than projected because institutions haven't poured their money in yet, right? The world's institutions that house most of the money have not poured into Bitcoin. Bitcoin's market cap is in the 500 billions, but that is a drop in the bucket compared to some of these firms have way more than that in their own. If you look at BlackRock and some of these crazy firms, they have like trillions of dollars. They can literally buy the entire market cap of Bitcoin. They're just simply not excited to buy yet at these prices. They are going to come in at later prices, which can drive the price from 100,000 to 200,000. And you're thinking, how can it go any higher? Because there's a lot of capital in these markets that have not been funneled into Bitcoin yet. So could Bitcoin get to $1 million a coin? I definitely think it can at some time in the future. If it gets over here, $300,000 a coin, $250,000, what do you think? Do you think Bitcoin can get to $100,000 or 200 or up higher? What I love about this is it helps me wrap my mind around the cyclical nature of all of cryptocurrency projects right now, currently. And like I said in the beginning, it won't always be that way, but until there's a decoupling, until another project moves ahead of Bitcoin, this is a fantastic resource for us. And I noticed back here when I started to get into the project that my money might have a lot higher growth potential if I'm in a different asset, like maybe one that's just beginning. And so I started to look at layer 2s. I started to look at other layer 1s. And I started to see if there are any projects that are in this phase down here that don't have 16 years of growth, that are just beginning, that will last and have a tremendous trajectory. It was a very powerful move and decision on my part to consider other projects outside of Bitcoin that present a higher growth value. And so I did a tremendous amount of calculations, like what if I would invest in a diversified portfolio where half of my money is in Bitcoin and half of my money are in altcoins? And then what if the price goes to here? What if the price goes to there? There are people that'll say you should have 75% of your portfolio Bitcoin and 10% Ethereum and 5% this and blah, blah, blah. And there are all these little calculations. Some people say you have to have 50% Bitcoin. And I was one that was caught up in that mantra until I started to think for myself. I started to freely think to myself, what happens if I didn't invest any, or if I invested only in an altcoin and it went like this? And so the numbers were dramatically different. It's not that you shouldn't invest in Bitcoin. I'm not bad-mouthing Bitcoin. I'm just saying that the opportunity that is out there goes beyond Bitcoin and these altcoins. So again, if you want my fast track, up-to-date messaging in real time, where you get presented with my portfolio, my insights to my strategy, go to Crypto Fluency and hit that fast track, and you come right up to speed because I'm doing things constantly. The movements that are occurring are extreme right now. What is happening in DeFi and decentralized finance is extreme right now. The pace is extremely fast. And if you can get into some of these scenarios at the right time, you can lock yourself in place for some upside potential growth. I don't have a crystal ball. I'm not saying this is financial advice. I'm saying that these updates, these messages in real time, my fast track membership, will give you real-time education on what I'm doing. It's not that you can do it or you should do it, but at least you won't miss out and allow some of these opportunities to fall through the cracks. I hope that this gives you some recognition of time, because time is money. So you're not only investing your time properly, but you're also trying to wrap your mind around time so you can psychologically prepare yourself. It's all about psychological preparation. In the next video, we're going to look at another chart in this Look into Bitcoin resource that I think you're going to really enjoy. So until then, stay strong, stay safe, and always be prepared.